In this CEO talk, we're gonna talk about how these living legends will give you a guidance to be successful investor and traders in financial market. So let's enjoy the session with Gerald Guppy. Mr. Guppy, welcome to Indonesia.
Thank you, it's a pleasure.
Thank you so much for your time. And how do you like Indonesia? The weather is good for you?
The weather is good for us. It is similar to home, so it's not too difficult.
Great. You are a living legend, and I'm really happy to finally meet you. And then all of my students in Astronacci learn and we introduce them about your books, the 36 strategies, right?
I appreciate that, and I'm sure your students can teach me many things as well.
Well, a lot of things happening post the COVID, post the pandemic, and a lot of people now jump into trading, investing, and most of them, they're millennials, they're young, and they're so talented. And we still believe experience is everything. And you, as the senior for everybody here, and we want to listen more about the strategies, about the philosophies of how we as the young people, young generations can be successful in trading. What do you think is the best for the young generation to come into the market and be successful in the investment and financial market? Maybe in the stocks or cryptos, a lot of people doing cryptos now, in the gold or Forex. What do you think?
It doesn't matter which market you're trading,
okay,
and it doesn't matter how you came to be trading that instrument or that stock.
Okay.
What's important is the discipline that you bring to it. So it doesn't matter what technique you use, what indicator you use, whether you're coming from a fundamental perspective or whether, and I don't like to say this, whether you're actually gambling in the market. And some people do.
Yeah.
But the key factor is the underpinning of success is the ability to control your losses. And that's what makes the market different from gambling.
Oh, wait a second. Control the losses.
The losses. Don't worry about the profits. The profits will look after themselves. It's the losses. The losses sneak away on you. They go ballistic. They grow from very small, suddenly they're very large. And what happens is that we all have a freeze point. In other words, and depends on individuals, we might be prepared, and I'll use American dollars here, we might be prepared to lose as an independent trader, say $10,000. Once it gets to $11,000, we freeze. We're not going to do anything.
Correct.
We're terrified.
Yeah.
10,000 is okay, 11,000 is not. And we sit there and we sit there frozen until it gets to 20 or 30,000, and then finally we collapse in a heap.
Yeah.
We have to tell our wife, yeah, cut the position, and we're dead.
So it's all about the money management, correct?
Money management is the key. Now I know that we tend to focus on this indicator or that indicator, and here we are at the IFTA conference. In the next 2 days, I'm going to listen to world experts talk about their indicators, talk about Bollinger Bands, talk about their approach. Not any one of those is so successful that that's all we need to know.
So every indicator, every technique's got some weakness, correct?
Every technique has its strength and has its weakness. And they have to be modified depending on the market conditions. Because markets today are not the same as they were 10 years ago, or 20 years ago, or 50 or 60 years ago. And some of our ideas come from the financial crash in the 1930s. I don't know about you, but I think the market's changed a great deal in the last 100 years.
Correct.
Still the same tools. We still use, for instance, a hammer and
all the
nails and so on to build a boat, to build a catamaran. But what we build now is different to what we were building 100 years ago. Different materials, etc.
It's no longer relevant, you think?
Oh, it's all relevant, but it has to be used in new ways.
Oh.
It has to be adapted to suit the conditions of the current market. And what's changing the current market?
What's that?
AI for a start, artificial intelligence.
AI?
Oh yes, AI is coming. And the question is, and this is what I'll talk about of course, the question is, does that mean the end of us as independent traders and independent technical analysts? Or is there an opportunity for us in that environment?
Yeah,
and I would say there is an opportunity.
Oh.
So the advice always comes down to cut your losses. It's the money management that lies at the base of every success. Not the method that you use, the tools or the indicators, but your ability to say, I'm going to limit the loss to no more, and the rule I use is no more than 2% of my total trading capital.
So every trade will be maximum 2% from the capital?
No. Every trade puts at risk only 2% of my capital. So in other words, I've entered in at $10, and if it falls to $9, that represents a loss of 2% of my total trading capital.
Yep.
I'm out of the trade.
So you're going to take a break and then come back again, or?
That's the theory. But the reality is, okay, we lost that trade, we'll move to another trade. And we'll continue to do that. But the important thing is, there are times when you are in touch with the market. The market is your closest friend.
Yeah.
Other times, it doesn't want to talk to you.
Yeah.
And you lose touch. So what you've been doing no longer gives the results. Now, you've got a choice. You can continue to do the same thing and get diminishing results, or you can modify and adapt and change your approach. And that's the challenge for every trader. These young traders who are coming in, they're bringing different attitudes and different approaches. Oh yeah, that's good, because that changes the nature of the market. Their job and our job is to understand what those changes are, what they're relying on, how the crowd is moving, how that behavior is impacting on price activity, and then adjust our methods to take advantage of that, to be able to extract.
So is that
those
okay
profits.
for our method to have, let's say, 70%, your style, my style, John Bollinger's style, 70% winning rate, but we have to be able to demonstrate a solid money management. Is that correct?
That's right, and that's what underpins the success. Because 70% winning rate is not a recipe for success. It's a great starting point, but the 30% will kill you unless it's managed correctly.
But aren't all the market has like different characteristics? Let's say I'm a trend following traders, investors, and I don't really get along with the some forex pairs. Let's say then I have to move to commodities or cryptos or stocks. What do you think about it? Is that all market good to be traded, or?
That's the wonder of the market. Think about it. We all look at exactly the same chart.
Yes.
And you look at that chart and you say, that's a buy. And I look at that chart and I say, that's a sell. Now, who's to say you're right and I'm wrong?
The time.
There will be times when you are correct, you make a profit out of it.
Correct.
There are times when I'm correct and I make a profit out of it. But the important thing is that we look at the same chart, the same price information, the same price behavior. The candle that you see is the candle that I see at exactly the same time. You don't get an advantage. We all see it at exactly the same time. But how we use that information, that's what makes the difference between success and failure. And
your money management model is keeping 2% each trade from the capital, correct?
My money management model is that I'm not prepared to lose more than 2% of my total trading capital on any single trade.
Correct.
Now, sometimes in choppy and volatile markets, I'll reduce that to 1%. But I will never expand it beyond 2%. Of course, price sometimes gaps below that and you end up blowing more than 2%. But on average, over time, that loss is limited.
What is the minimum
2%.
capital you think is to be safe for every traders in the CFDs or leverage market?
It depends on the individual. I know that's a very sneaky answer, but the reality is that we have young traders coming into the market who we would, under traditional terms, as say, are undercapitalized. That's why they're attracted to these derivative markets, because a small amount of money gives them exposure with leverage to a larger thing. That's good. That's why you and I trade derivatives. But for these people who don't have the background and experience, that becomes a more dangerous tool because their losses mount very, very rapidly. So the first thing they have to learn is the discipline to cut the loss. The rest they can learn over time, but if they don't learn to cut the loss at the first, then they have no future.
What do you think about stop and reverse? Let's say they buy and then cut and then you sell short it.
S&R is, I don't find it a useful strategy, but other people do. And again, that's the wonder of the market. You can use methods that are completely different from mine and make a good living out of it. And it doesn't impact on my ability to use the methods. Remember, there are hundreds of ways to make profit in the market.
There's nothing wrong.
But there are thousands of ways to lose money in the market.
Money.
And that's where the balance lies.
That's very, very good wisdom. And tell me about your business now. You're living in Australia now, right?
I've always lived in Australia. You can probably tell that from my accent. I live in Darwin, which is at the top end of Australia. So it is close to Indonesia, close to Singapore, close to China. So my work these days, of course, is trading financial markets, and we mainly trade the Australian market. Everyone trades their home market.
So you're like a fund manager now? Or?
No. I've never managed funds. I've never managed other people's money. I'm an independent trader. I trade on my own account with my own money. And that, to some extent, makes me different to some of the other people that are involved in financial education. So my interest is what we talk about is what changes, what modifications that I'm using in our own trading for changing market conditions. Primarily, I trade Australia. I also very closely follow what's happening in Shanghai, in China.
The China market?
China market offers massive opportunities.
It's a stocks market, right?
Stock market.
And then you trade like the real stocks, or you're trading the CFDs?
No, I trade the real stocks.
The real stocks, okay.
And that's now possible through cross-border trading between Hong Kong, Shanghai and Shenzhen. The China market has particular characteristics that are suited to my style of shorter term trading. And there are some structural factors, some of the plumbing in China markets that makes it more attractive. Yep. In Australian markets, same as Indonesian markets, we're seeing greater impacts of volatility. Trend stability and trend sustainability is no longer as good as it used to be. Why is that happening? Is it just these young people coming in? Is it the use of derivatives? Is it the growth of ETFs that are distorting market behaviour? Is it money drying up? No one's got as much money as they used to have to put into markets, so they're putting it into CFDs and derivatives instead. These are all factors we have to think about. So it's not just how you trade or what you're trading, it's your philosophy of the market. You need to you develop an understanding. Not everyone puts it into words. We just go to work every day and we do this. But it's useful to understand how you think about the market. If you think it's manipulated, and some markets are, then how you identify opportunities is different to a market where you believe it's not manipulated. All this comes into play.
That's a mindset things, right?
Yeah. But remember, I'm Australian. So that means what I want to do is I want to generate a full-time income from part-time work.
Generate full-time income, part-time work.
That's right.
That sounds amazing.
That's my objective.
And then what is the trading style that you have now? Are you a trend follower, or you are like more to counter trend moves, something like that?
I think what's important to recognize there is not what is your trading style, but what methods are you using that are successful in the current market?
In the current market.
So long-term trend trading in the current market is much more hazardous than it ever has been because of increases in volatility. What drives that? That's another discussion altogether.
Yes.
So what I try and do is I try to find those stocks or those instruments that are behaving in ways that are compatible with the methods that I use where I have success.
Yeah.
Because we use lots of methods, but we all have our little group of favourites where we know that, yep, there's a high probability that if I use that method, I'm going to be successful. That's our core. But we reach out from the core as markets change and we test new ideas, new approaches. That's something, again, I'll talk about on Saturday. Some new understandings of old behaviours and the way we need to modify our approach to use that information to improve our identification of a trade opportunity. But how I trade that eventually, having identified it from the stock pool, I'll still use the same old tools. After all, we are limited in the tools that we use. It's how we apply them, when we apply them. That's what makes the difference.
Wow.
You can use a hammer, I can use a hammer.
The way we use it is
one of us is going to get a black thumb from doing it.
Yeah.
So it's not proper.
Yeah. And you're saying now the volatility is different and the way we use the method is also different now, you're saying?
The volatility has changed.
What do you find weird in this?
Markets have become more volatile. So you can have a good, long, steady trend like this and I'll join that, and then bang.
Yeah, that's crazy thing, you know?
If I can use a surfing analogy, and I'm not a surfer, so I don't know whether it's correct, you get dumped. of a big wave. So we can't have the confidence that we used to have. Let's join this trend mid-trend, because we know it's been well established for the last 3 months, so it's likely to continue. And all of my indicator analysis says, yes, this trend is likely to continue. And we do that. And we wake up one morning and it's lost 15%. It's boom, overnight. So what we're having is an amplification of relatively minor things. Think of social media. So there's a small event that gets amplified into a larger event. We're seeing this behaviour increasingly in markets. So trends that are stable suddenly collapse as a small event gets amplified. It may be a small event in terms of company fundamentals, company reporting, even an external factor that's got nothing to do with the company but it's being sold off. Look at the sell-off that's taken place today. What's driven it?
So the money management will save you from this kind of problems.
That's right.
Great. And then the last suggestion and advice or wisdom for this young generation, what is the best preparation that they need to prepare other than that money management?
Practice, practice, practice.
Practice, practice, practice.
Practice doesn't always make perfect, but practice hopefully gets better. And if you're not, stop practicing and do some other work instead. Now, all jokes aside, the market changes. That's what makes it so fascinating. If the market was the same now as it was 30 years ago when I first started trading, it'd be exceptionally boring. But it's these changes that take place. That's the intellectual challenge. It's not about making money. Go and read George Soros. Go and read any of the greats. They don't talk about making money. They talk about the challenge of understanding the market and keeping in touch with that market.
So it's not about money anymore.
No, money's a byproduct. Now, it's a very useful byproduct. I'm quite happy with that. Don't take it away from me. But that's not the primary purpose of being involved in the market. That's the intellectual challenge for me.
Oh, wow. That's a new for me. Intellectual challenge is more than earn money from the market.
Oh, yes. That's what makes it fun. That's what makes it interesting.
Wow. That's a new. Well, thank you so much for all the wisdoms. You're a living legend and you are really kind to share with us. And I really hope that you keep trading, keep inspiring, and then make some great stuff in the years coming. Thank you so much, Mr. Guppy. I'm really happy to have you here.
And thank you for the
invitation.
invitation.
So guys, thank you so much for your time, and then we are grateful to have Mr. Guppy here with us, and hopefully your success. And remember, the 2% rules will save your life from this market volatility.